TQQQ. This ETF has been getting a lot of attention and a lot of press lately, and I wanted to do a video on this ETF for all of my viewers to get a better understanding of what it is. The reason that this fund has been getting a lot of attention is because growth stocks in the Nasdaq 100 have been sold off at a historic rate, and many people are trying to use TQQQ as a way to quickly capture more upside during a potential rebound in the Nasdaq 100. But, and this is a big but, you have to know what you're doing with TQQQ because this is a leveraged ETF and this fund can make or break your portfolio. To be completely honest, TQQQ is an extremely risky investment and you truly have to understand what you're getting into, and that's what I'll explain in this video. In the first part of this video, I'll explain what TQQQ is. Specifically, I'll explain what leverage is and how that differentiates this fund. I'll also explain what makes this fund different from QQQ, and we'll touch on what types of stocks this fund invests in. In part 2 of this video, I'll explain why TQQQ is trending on internet forums and television channels like CNBC, and why interest in TQQQ has substantially grown in recent weeks. In part 3 of this video, we'll talk about the risks of owning TQQQ, because as much hype as this ETF is getting, I'm not sure people know what they are getting into when they buy this leveraged ETF. So in this section, I want to cover the risks and considerations that you should make before owning TQQQ. And in part 4, I'll give you my thoughts on TQQQ, whether or not it's worth owning, and whether or not I own TQQQ or I'm thinking of owning TQQQ in the near future. So if this sounds good to you, make sure you smash that like button for the YouTube algorithm, and please consider subscribing to my financial education YouTube channel, The Beat of Business. So let's start off part 1 of this video by talking about what TQQQ is. And in order to understand what TQQQ is, you need to know what QQQ is. Invesco QQQ, better known as just QQQ, is an exchange-traded fund issued by Invesco that tracks the Nasdaq 100 index. In fact, it is the largest, most well-known, and widely held ETF that tracks the Nasdaq 100 index. For many investors, including myself, picking growth stocks or technology stocks that trade within the Nasdaq 100 requires too much research and too much time. Should I buy Apple stock today? No, maybe I should buy Microsoft stock. No, actually I'll buy Tesla. Yeah, I'll buy Tesla today. So instead of sounding like that and wasting time and effort analyzing which individual tech and growth stocks to buy, many investors, including myself, just buy QQQ. With QQQ, you don't have to select stocks within the Nasdaq 100. You just buy the entire Nasdaq 100 index with a single ETF. And by doing this, I get to own 100 different growth and technology stocks like Apple, Microsoft, Tesla, Alphabet, Amazon, and 95 other companies through a single, well-diversified exchange-traded fund. Now in comes TQQQ. TQQQ is also an ETF like QQQ. However, it is a leveraged product that uses derivatives and debt to increase returns to investors. Specifically, it seeks returns that are 3 times that of QQQ, and that's why there is a T in front of the name. The T means that it is a triple leveraged version of QQQ. And the investment objective of TQQQ is simple. It seeks daily investment results before fees and expenses that correspond to 3 times or 3x the daily performance of the Nasdaq 100 index. So if the Nasdaq goes up by 1% on a given day, that means that QQQ also went up by 1% on that given day because QQQ directly tracks the Nasdaq 100 index. However, in this instance, TQQQ would be up by 3% on that day. And if the Nasdaq goes up by 2.5% on a given day, TQQQ would be up by 7.5% on that given day. That, ladies and gentlemen, is called leverage, and leverage works in both ways, up and down. And that's what a lot of people don't fully consider when investing in products like this. But more on that later. In this section of the video, I'll explain why interest in TQQQ has grown over the past couple of weeks. The primary reason that interest has grown in TQQQ over the past couple of weeks has a lot to do with the recent performance of the Nasdaq 100. You see, since the start of 2010, the Nasdaq 100 has had a bull run like we've never seen in the history of the stock market. As an index, it's outperformed just about every other major index out there, including the S&P 500. In fact, if we take a look at the 5-year performance of the Nasdaq 100, which is the blue line, versus the S&P 500, which is the yellow line, you'll see that the Nasdaq 100 has vastly outperformed the S&P 500, with the Nasdaq up over 179% versus the S&P 500, which is up a little over 95% during that same period of time. But more recently, something interesting has happened. Since the start of the year, the Nasdaq has sold off at a much greater rate than the S&P 500, mainly due to rising interest rates and rising inflation, which greatly impacts the growth stocks that make up the Nasdaq 100 index. From the start of the year until today, March 30th, 2022, the Nasdaq 100 is down 8.01%, while the S&P 500 is only down 3.77%. But if we go back a couple of weeks to March 14th, that's when the Nasdaq was at its current year lows. And from the start of the year to March 14th, the Nasdaq was down almost 21%, while the S&P 500 was only down 13%. Now, why am I showing you these charts? Well, I'm showing you these charts because they have a lot to do with why interest in TQQQ has grown in recent weeks. Many investors think that the Nasdaq 100 has hit its bottom and it will start reversing to the upside. And in order to get more exposure to the Nasdaq 100 while it's trading at much lower valuations than it was only a few months ago, many investors are using TQQQ and the 3 times leverage that it provides as a tool to increase the return on their portfolios at a greater rate. Essentially, they are buying the dip and using the leverage that TQQQ provides in hopes of greater returns than just buying QQQ alone. And with this newfound interest, TQQQ has now positioned itself as the 5th largest ETF inflow leader in 2022, according to Bloomberg data. So if you were curious as to why interest in TQQQ has grown so much over the past couple of weeks, there's your answer. In this section of the video, I want to explain the risks of owning TQQQ and the considerations that you should make before investing in TQQQ. And this is probably the most important section of the video, so I really need you all to pay attention. The first risk of owning TQQQ is that it's a 3 times or 3x leveraged ETF. So that means that when the Nasdaq 100 goes up 2% in a day, this ETF goes up 6%. Now that may seem like a no-brainer, right? Dude, that's awesome. Why would I even waste time buying QQQ? I could just buy TQQQ and I'll be rich in no time. But ladies and gentlemen, the inverse of this is also true. If the market goes down by 2% on a given day, this ETF goes down by 6% on that given day. And if you hold this ETF over a period of time, which I don't recommend, but if you hold it for, let's say, 6 months and the market goes down by over 33%, well, there goes all of your money. And if the market were to go down 50%, not saying that would happen, that means your portfolio would be down 150%. And that means that you owe somebody some money. So investing in this ETF requires a strategy, and without a strategy and understanding your risk tolerance, you can find yourself in serious trouble by investing in TQQQ or any other leveraged ETF product like this. The second risk of owning this ETF, and this is more of a consideration to be honest, is that this ETF is only suitable for short holding periods. So if you are not a seasoned day trader, do not buy this ETF. And if you're thinking of buying this ETF and holding it for a long period of time, do not buy this ETF. And to ProShares' credit, they explicitly state this on their homepage. It says, Due to the compounding of daily returns, holding periods of greater than 1 day can result in returns that are significantly different than the target return. And ProShares' returns over periods other than 1 day will likely differ in amount and possibly direction from the target return for the same period. In a nutshell, this is a nice way of telling you not to hold this ETF for longer than 1 day. The third risk of owning this fund, and this is more of a consideration as well, is that there is no guarantee of return. Recently, there have been so many articles on the internet talking about TQQQ, and the majority of these articles and financial news segments fail to explain the underlying risk of owning a leveraged ETF product like this. And just because something is trending or there is hype around a certain stock or a certain ETF does not mean that it is right for you. The people that talk about these types of products either don't understand them very well themselves and just hype them up, or they are very experienced investors and know exactly what they're doing. And I don't want to scare you all away from TQQQ. I just want you all to fully understand what you are getting yourselves into. And that's the primary purpose of this video, and the primary purpose of this channel is to provide you all with the education and information needed to make better financial decisions. Now, in this section of the video, I want to give you all my thoughts on TQQQ. Particularly, do I personally invest in TQQQ, and do I think it's a good investment? Personally, I do not invest in TQQQ. However, I do invest in QQQ. And the reason that I don't invest in TQQQ is because the risk profile of this ETF is too high for my taste. But more than that, I'm not a day trader, I'm a long-term investor. And frankly, TQQQ is not a product that is designed for the long-term retail investor like me. It is a tool that day traders and experienced institutional investors use to try to capture excess market returns. So do I think TQQQ is a good investment? Again, that depends on who you are and your level of expertise. Now, I'm sure that there are people who love it, and that's because they know how to use it and they understand the risks that come along with trading a leveraged ETF product like TQQQ. And as I mentioned earlier in this video, interest in TQQQ has really risen on social media and in terms of Google searches, and that's because the Nasdaq has been experiencing a sell-off since late December, and people are using TQQQ as a tool to capture the growth rebound. But I can tell you from experience, and I can tell you from history, that timing the market is nearly impossible. And when you invest in a product like TQQQ, your timing has to be impeccable or you will pay the price. And that's why I just dollar cost average into Invesco QQQ and leave TQQ out of my portfolio. And speaking of QQQ, if you haven't invested in QQQ, it's a great way to invest in non-financial growth stocks, and right now is not a bad time to start your position. The Nasdaq is still considerably down from its highs in late December. Well, ladies and gentlemen, I hope you all enjoyed this video. And as always, please do your own research and due diligence. This video is intended to be a part of that research and due diligence. Lastly, please don't forget to hit that like button for the YouTube algorithm, and please consider subscribing to my YouTube channel, The Beat of Business, for more financial education content like this. Thank you all for watching. I will see you all next time.
I'm gonna buy some Bitcoin. I'm gonna buy some Ether.